Good morning, everybody. My name is Jennifer Ropiak. I run precious metals derivatives at NYL Life US, the US futures exchange of NYSE Euronext. This morning, I'm here on the trading floor with JJ Kinahan, Chief Derivatives Strategist at TDAmeritrade. JJ, if somebody wants to diversify their portfolio by adding gold and silver to it, there are a lot of choices. When might futures make sense?
Well, futures make sense, first of all, understanding how they work, getting some education on what happens with futures. I think people were afraid, they thought it would be too confusing. Actually, futures products are incredibly straightforward. So just understand what the tick size mean. In other words, you know on a stock, if it ticks once, it's worth a penny. On futures products, it's not always the same amount. Just check what it is. But once you understand that, they're fairly straightforward, fairly easy to understand. You buy them, you sell them, they go up or down. Along with that, though, let's not make it like it's all fairyland. You do have to understand that there are some risks with them, and there's risks with anything. With risk comes opportunity, which is great. But the best part about it is, as we see a natural progression of many retail traders, they start with basic stocks, then they go to options, they go to more advanced options, and then they add futures to their portfolio because they start to realize that it can all be one large picture, one large portfolio, which they hopefully see right together, and they can say, you know what, I see some risk in the market right now. Maybe there's a risk that the stock market's going down, so to hedge themselves, they might buy a gold future against it because they feel that people will turn from stocks to gold. There are so many opportunities for folks to use these as part of their overall portfolio, and without maybe getting some tax consequences of what's going on with their stocks, et cetera. So it's a very, very smart way to hedge your portfolio under different market circumstances.
Now, if a trader or a retail trader is starting to trade futures, when might the mini contract, for example, NYSE Life US mini gold is YG, which is 33.2 ounces, or our YI, which is 1,000 ounces, when might the mini contract make sense for the retail trader?
I actually think as the retail trader is starting out, they might want to think about starting with the mini contracts, because the nice thing is it doesn't take as much capital. It's a good place to learn about how they work without putting up as much capital. Again, not saying that you can't always use it. You can absolutely always use them too. You can just increase your size there. But more importantly, it really gets you into the market because, again, it's very difficult in anything to step right into the bigger arena, so to speak. This lets you stay in the arena where the contract sizes are smaller. They're built for the retail trader. They didn't have the institutions necessarily in mind when they built this product. They said this is going to be a retail trader-friendly product so that they can understand the product. It's smaller risk, and overall that makes a lot of sense. We're always big advocates at TDAmeritrade of taking smaller trades with smaller risk, learning about the products. It's very easy to become a bigger trader. It's very difficult to trade too big and get slapped around.
All right. JJ, thanks for visiting us this morning.
Jennifer, always a pleasure to see you.